Every few months, I do a video assessing the overall health of the stock market. I look at valuations. I look at the overall sentiment, if investors are extremely bullish, if they're extremely bearish. I look at a lot of different things. Many different indicators right now are flashing red for the first time since August of 2019. And my favorite indicator, I've been waiting for it for a while. I talked about it so many times on YouTube. It's finally happening, and I have to talk about it. And this is going to be very, very important. And I really hope you enjoy it. Now, I know the first comment I'm going to get is that I believe that I want everything to go down, and I'm telling people to sell all their stocks and get out and short the market and do all these things. And all of that stuff is not true. And this is something that Howard Marks said. He said, you can't predict, but you can prepare. You can assess all the case scenarios, everything that's happening. And if you watch this video and you pay attention, you're gonna find out and you're gonna know that there's a very high likelihood of much lower stock prices over the next 4 to 6 months. And maybe you could prepare by having a little bit more cash on the side. And that's what I'm personally doing. I'm not telling people to sell your stocks and none of that stuff. So I hope I don't see any comments, people saying that. And this is something else that he said. He said you can adjust your risk tolerance and your risk in general of your portfolio based on where we are in the market cycle. And this is where I'm going to assess in the video. I'm going to assess where we are in the market cycle. And it's always the same thing, even though people say this time is different, it's normally not different. And I'm going to talk about sentiment, evaluations, and some indicators. And I really hope you enjoy it. The first one is some valuations. And I'm going to try to keep it very, very simple because a lot of you, I think you know that a lot of the valuation stuff, Buffett indicators and many others, a lot of them are at record high. And I don't want to talk about those. But a very interesting metric to me was the blue line. And the blue line is the S&P 500 excluding the mega cap 8. The mega cap 8s are the Magnificent 7, and you add Netflix to them, you get the mega cap 8. Now this is where the good stuff are. This is where earnings growth is happening. This is where the margin expansion is. It's happening with Amazon, Tesla, Apple, Microsoft, Meta, all those amazing companies, Nvidia. This is where the growth is. So this is where the good things are of the S&P. If you take those stocks out of the S&P, the 492 stocks are trading at 20 times earnings, as high as they were in 2021. So the market in general, even outside the big 8, is priced to perfection. And I just don't believe this is sustainable for the next year or two, especially with earnings. We had a record year in earnings this year, and it's going to be very hard to sustain it on a comp basis year on year going into 2025. But I'm going to talk a little bit about sentiment. And this is what Warren Buffett said. And he said, most people get interested when everyone else is. The time to be interested is when no one else is. You can't buy what is popular and do well. And this is something that a lot of people forgot because many people bought a lot of popular stocks and made money recently. So we tend to forget all those very important lessons. And this is another way to assess sentiment. And I'm not trying to hate on other people on X or judge other people, but I'm just using those examples to show you where we are in the cycle and to show you how other investors are thinking. And people will say, yeah, but this is all trashed. All of that stuff is not important. But you said the same thing in 2021. If you look back at 2021, it was obvious when people were pumping and dumping the meme coins, when we had the SPACs going up a few 100% going public, when you had all those things that were happening and Tesla going up because Hertz bought some cars and it went up $10 billion or whatever it is. All those things were massive signs of a speculation. It was a massive signs of a top. And if you look back at GME and AMC, it was a very clear sign of a stock market top. It was obvious. But it's obvious in hindsight. It wasn't obvious back then because a lot of you guys shrugged them off. You were like, yeah, whatever. Because you were up so much, you had so much confidence, you don't want anything bad to happen. So you ignore all those things and you believe they don't matter. But the truth is they do matter. But a lot of people, they can't pay attention to them because they don't want the market to go down. And I don't want the market to go down either. I'm going to make much more on the way up. And I'm up a lot this year just like you are. And everything is fine. But what I want in reality are different things. And most people, they can't split them apart. They put them together. And whenever they wish they want to happen, this is what they watch. They watch YouTube. They want confirmation bias. People tell them they're right. They don't want someone to tell them they're wrong. And it's very bad in terms of investing. But this is what this person said on X. He said, I have missed out on NVIDIA's 2,500% gain over the last 5 years. I have missed out on Tesla's 1,600% gain over the last 5 years. And I will not miss out on Palantir's gain over the next 5 years. Now, there's nothing wrong with that. Palantir could still go up from here. Okay. But you have to remember that Palantir is trading at 167 times earnings or 51 times sales, growing sales 20 to 23%. And people told me, yeah, but HIMS is expensive. HIMS is trading at 35 times earnings, growing earnings 250%, and is trading at 3 times sales, growing sales 97%. I'm just saying, guys, there's a lot of more expensive stocks than the stock that I'm trying to talk about. But the most important part about this tweet is that it got 1,100 likes. So 1,100 people agree with that person that they don't want to miss out on Palantir's gains over the next 5 years. And there's nothing wrong with that. But this kind of mindset is called FOMO, the fear of missing out. And whenever you have a lot of FOMO, a lot of that stuff in the market, all those things, they don't happen at the bottom, they happen at the top. And all those things are very important indicators for us to look at to try to find out, where we are in the market cycle. And there's many different things that are happening right now that have happened many times before, near a lot of tops, and they only happen at tops, they don't happen at the bottom, including a lot of meme coins like this coin called Fart Coin, which is up 190% in a week, just out of nowhere. Absolutely crazy. You have a lot of, you could say, celebrities or people that are well known just dumping coins on other people and scamming them out of money. And it's unfortunate. But the reason why we have so many willing buyers, the main reason people are willing to buy all this crap, the main reason why is because we have euphoria, because people want to get rich quick, because people are seeing other people make thousands and thousands% of meme coins, and they want to have the same thing. All those things, they don't happen at the bottom. They happen near the top. I'm just being honest. I'm not saying the market can go higher from here, but in terms of sentiment, in terms of what we have in the market, we definitely have a lot of euphoria and we have a lot of bullish sentiment. This is all I'm trying to say. And you could see it from maybe a lot of your friends. Like a lot of people told me, what would you do in my case if you're only up 25 to 30% year to date? I told him only 30%. 30% in a year is an amazing return. But the only reason we feel 30% isn't too high is because we see screenshots on YouTube or on X, people up 200% year to date. We feel 30% is no longer enough. I mean, all that stuff is not normal. I'm just being honest, guys. Like it's just not sustainable. I'm just being honest. And that's why I made this video. You are not a stock market genius. And I got 18,000 views because people relayed they just felt like geniuses. And this is what happens in, near euphoria levels. That's what I'm going to say. But this indicators that I've been waiting on, and it's finally turned positive, is a 10-year minus 3 months. And this indicator has been accurate, not 90% of the time, 100% of the time. It has been accurate 100% of the time. Every time it went negative, then it turned positive, and we had a recession, and we had a stock market crash. And it's a very timely indicator. It normally happens 4 to 8 months. It goes positive, then we have a recession, we have a stock market crash. Same thing happened in 99. It went positive, we had a recession. A few months later, like 4 months later, I believe, we had the beginning of the dot-com bust and the stock market crash. Same thing happened. It went negative and then it went positive in 2007. We had the 2008 financial crisis and stock market crash. And it even went negative and positive before COVID. And we had the COVID crash. Then it went negative in 2022. And for the first time in 2 years, it has turned positive. And the timeline is 4 to 6 or 4 to 8 months. Now we could do two things. We could say, yeah, whatever, this time is different, and shrug it off and go all in, some kind of a quantum computing stock. Or maybe we can, be a little bit rational, like, all right, this indicator has been accurate 100% of the time. Maybe we need to pay attention. Maybe, if you combine this indicator being accurate 100% of the time, you combine everything I showed you with sentiment of where we are and the FOMO that we have, and you combine all that stuff with some valuations that are a little bit overstretched in a market that's kind of priced to perfection, you're like, maybe I'm going to keep some cash on the side. This is the whole thing. I'm not telling people to sell all your stock. And I have stocks like Hims and Hers has could go down 50% next year if we have a market crash. And I'm well aware of that. And I couldn't care less because I could just buy more. The money isn't made when the market is going up. It's made when the market is going down. But when the market is going up, people get in a state of euphoria that they're all invested, even on margin, that they don't even have any cash to buy the dip when the market is going down. This is the situations that a lot of people, get up, stuck in. And I don't want you guys being stuck in the same situation. But as I said, we don't have to go down. It could be 1995. We could have 4 more years of euphoria. Or it could be 1999 and we're going to have, 3 years of terrible returns. Or the market doesn't have to go up forever. Like, this is just the way it is. It's very, very possible. But the best way to be prepared is to, we could watch this video and do your own research. And if you're like, okay, there's a very high likelihood of a pullback happening over the next 4 to 6 months, maybe you decide to keep some cash and, be prepared so you don't just, you'll be confused and you don't know what to do when the market's going down and all these kind of things. And this was my main message from the video. I hope you enjoyed it. Hope you got some value. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.